The backdrop here is the U.S. economy is stronger than people think. So we look at our data internally, and in the second quarter, we think the U.S. economy is growing near 4%. So when you combine that with a 2% in the first quarter, you're run rating at 3% over the first half of 2018. So the Fed actions that Chairman Powell will speak about today are going to have to reflect that. And we expect him to very much signal 2 more interest rate rises this year, one clearly in September and one in December. And then when they get to 2019, I think they're going to be a little bit more discerning. But right now, this is what we expect to hear from him tomorrow, or this afternoon.
Yeah, the only question, Mark, I have around this, and I've highlighted earlier, that I think it is surprising right now that the US is the standout in a global context, and you have to wonder whether this can continue in isolation when we see first signs of weakening in China, and Europe clearly has already softened quite a bit. And we know obviously that it is the one country because of President Trump's fiscal stimulus now that got an extra boost into what we would believe is the last phase of the cycle. And yet, if you listen to the Fed, what was interesting is that there is a much more inward-looking focus than what we heard previously from other Fed governors. And my worry is around global dollar liquidity and the liquidity picture in total, because next to the interest rate hikes, obviously we have to understand what they're going to do with the balance sheet at the same time when Treasury issuance is on the rise and hence naturally sucks dollar liquidity back into the country. Because to my mind, the cases around Argentina, Turkey, the fact that bank stocks globally, particularly the big ones, have underperformed dramatically, to me are connected events that all link back to this. And so to me is the big question mark when we either will see them acknowledging the impact it has globally, which previous Fed chairs have done more openly, or whether we need to see much weaker markets before we see the reaction.
Right. Yeah. What is most interesting in the U.S. economy, and I agree, it really is outperforming expectations right now, is that we think it reflects almost a post-recession recovery. And the post-recession recovery that a lot of people have missed is what happened in 2015 in the industrial world following the reset of oil prices around the world. And so what we see today is a strengthening industrial world in the United States as that market fully recovers. And the demand that we see pulling through the system, the capital goods orders and the health of the consumer, really is driving the strong U.S. economy. I will say, Europe is quite interesting to us. While the pace of growth in Europe has, in fact, I'd say, plateaued, we think Europe is actually quite strong right now. It's growing at about 2%. I would say long-term 2% growth in Europe would be a rate that I think anyone would accept. And despite the news overnight from Beijing on expectations out of China, we felt that China was growing at 5 or 6% for quite a while now. And so for them to say, well, we may not grow at 7, but we may grow at 6 for an economy of that size, we think over the long term is pretty darn impressive.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.